CleanSpark, ticker symbol CLSK, is currently sitting at a major discount. But is this a true bargain ready to explode upward, or just another trap for investors? Today, we're diving deep into whether CLSK is a hidden gem with explosive potential or a value trap better left alone. Let's get started. Welcome back to Stocks Telegraph, where you get the latest financial market news and updates to power your investments. If you're serious about spotting hidden opportunities before the crowd, make sure to like this video, subscribe to the channel, and hit the notification bell so you never miss out on the next big play. As of April 29, 2025, CleanSpark is trading at $8.52 per share. That's a steep decline of about 58.7% from its 52-week high of $20.64 achieved earlier this year. However, it's also about 32.1% above its 52-week low of $6.45, indicating that some recovery momentum might be building. Over the past month, the stock has shown notable volatility. For instance, on April 22nd, CleanSpark surged by 17.4% during the trading session, but gave back a slight 0.11% the following day, showing that investors are still uncertain about its near-term trajectory. Currently, sentiment around CLSK is mixed. On one hand, its inclusion in the S&P Small Cap 600 index reflects its growing relevance and operational strength. On the other hand, short interest has risen by 6.39%, suggesting that a significant portion of the market remains skeptical about its prospects. This sharp contrast between positive developments and cautious trading behavior raises a critical question. Is Wall Street mispricing CleanSpark's true value, or is there a hidden risk investors should be more concerned about? Let's dig deeper into the story. CleanSpark's recent sell-off isn't simply a reflection of its own performance. It's tied closely to larger forces affecting the market and the industry as a whole. Broader market volatility has hit growth stocks hard, especially those in technology and renewable sectors. With interest rates higher and economic uncertainty lingering, riskier assets have been under constant pressure, and CleanSpark was no exception. The cryptocurrency mining sector, where CleanSpark operates, has also seen a correction. Bitcoin prices have remained volatile, and mining difficulty has increased substantially, squeezing profit margins across the board. Even companies with efficient operations like CleanSpark have not been able to escape the impact of these industry-wide challenges. Additionally, energy costs have been rising globally. While CleanSpark's commitment to renewable energy does offer a strategic advantage, the broader concern over escalating energy prices still hangs over the entire crypto mining space. All of these factors combined have dragged down CleanSpark's stock. But importantly, this discount doesn't necessarily point to a collapse in its fundamentals. Instead, it might simply reflect a market that's currently more fearful than rational, presenting an opportunity for those willing to look deeper. Despite the headwinds, CleanSpark has positioned itself to capture significant upside if and when conditions improve. One of its major strengths lies in its ability to mine Bitcoin at lower costs. In the fourth quarter of 2024, the company reported an average marginal cost to mine one Bitcoin at approximately $34,000, far below the prevailing Bitcoin market prices. This cost advantage not only supports stronger margins, but also allows CleanSpark to accumulate Bitcoin during downturns, providing them with a valuable asset base for the future. Another important catalyst is CleanSpark's emphasis on sustainability. Over 90% of the energy powering its operations comes from low-carbon sources like solar, wind, and nuclear energy. This focus on green energy protects CleanSpark from volatile fossil fuel prices and positions it well in a world where environmental sustainability is increasingly rewarded by both investors and regulators. Their ongoing expansion, including a newly developed 50-megawatt Bitcoin mining facility in Washington, Georgia, is expected to significantly enhance their operational scale by hosting up to 16,000 new miners. Strategic acquisitions also play a big role in CleanSpark's future growth. The $155 million purchase of Gride Infrastructure has expanded CleanSpark's operational footprint and boosted its overall mining efficiency. With a target of achieving a 50 EH/s hash rate by mid-2025, CleanSpark is clearly building toward becoming one of the dominant players in the Bitcoin mining sector. If Bitcoin prices rally, CleanSpark's model, lower costs, bigger reserves, and more efficient operations could deliver a powerful payoff for investors. That said, investors must be clear-eyed about the risks involved. CleanSpark's operations remain heavily energy dependent, and although the company's renewable approach mitigates some of this risk, unexpected increases in electricity costs could still impact profitability. Bitcoin's notorious price volatility presents another major risk. Since CleanSpark's revenue is directly tied to the value of Bitcoin, large downward moves in Bitcoin's price would inevitably squeeze margins and affect earnings. Finally, regulatory risks cannot be ignored. Governments around the world continue to reassess policies related to cryptocurrency mining and carbon emissions. Future regulations could impose higher costs or create operational barriers, especially for energy-intensive businesses like CleanSpark. While the company is taking steps to manage these uncertainties, it's critical for investors to understand that regulatory risks are an unavoidable part of the crypto mining industry. Taking a step back and weighing the bigger picture, CleanSpark represents a classic calculated risk for investors with a long-term horizon. For aggressive investors who thrive on volatility and are comfortable betting on high-growth assets, CleanSpark's current valuation presents an attractive entry point, offering a significant upside if Bitcoin prices recover and if the company continues executing on its expansion plans. For more balanced investors, CleanSpark offers a compelling case for medium-risk, high-reward exposure, thanks to its strong renewable energy profile and operational efficiency, which differentiate it from less disciplined players in the mining sector. Meanwhile, for investors who are specifically focused on the crypto sector, CleanSpark falls squarely into the high-risk, high-reward camp, where the potential for explosive gains comes with a higher tolerance for market swings and regulatory shifts. Analysts are generally optimistic about CleanSpark's prospects. The current median price target is around $19.50, with some forecasts reaching as high as $27. Given the current trading price of $8.52, these targets suggest a substantial upside potential for investors willing to ride out the volatility. At this discounted price, CleanSpark presents a calculated risk. The real question for investors is simple. Are you willing to think long-term and ride out the bumps in the road for the chance at significant gains? Now it's your turn. Are you feeling bullish on CleanSpark's explosive potential, or are you leaning cautious given the risks we've discussed? Drop your thoughts down in the comments below. I'd love to hear your take and spark a real discussion among investors like you. If you found this breakdown valuable, do me a favor and smash that like button. It helps a lot more than you might think by pushing this video to other smart investors out there. Also, don't keep all this information to yourself. Share this video with a friend or fellow investor who's looking for their next high-potential play. After all, the more sharp minds we have in the conversation, the better our strategies will become. Thanks for tuning into Stocks Telegraph, where we turn market noise into real investment insights. Stay smart, stay invested, and I'll catch you in the next one.